Mark Selby. How are you, sir?
Mr. Matthew Gordon, doing very well here in your home country.
Oh, yeah, you're in Londinium, I hear.
I am for LME week. So
okay, how's that? Who's there? What are they talking about?
it's always good. I find it super helpful as a commodity analyst, part of my job, because you get producers, consumers, and traders all in the same space in the same time frame, and even people you have a good relationship with. Generally everyone talks their book, but if you can sort of triangulate between the various books, you get a pretty good sense of where the market's at. So I always find it as sort of as a good anchor point in terms of what's happening in the marketplace.
Right, and any reference to the shenanigans of earlier in the year? We're not talking about that anymore.
I think people are tired of talking about it. It's like, yeah, it's still raw. I mean, again, it's a lot of the guys who are in town this week who, either made money or lost money, that week. And a lot of them lost money because of the canceled trade. So it's a dark place they don't want to go to.
Okay.
So.
Well, you've got a hard stop because you're right in the thick of it. I'm seeing you for dinner tonight, so I can catch up with you then. Let's hit us with it. So what nickel prices at the moment doing what?
Trading right in their range again, as one of the traders I ran into. And this is a guy who actually in January, February is the only person I know who said that nickel could completely explode. And he totally called it. But as he said today, it said it's totally boring. It basically, we buy as the price drops towards 20 and we sell as it goes towards 25. And we've really been in that range now for almost 6 months. The thing about, when you trade in a pretty narrow range for period of time, generally the longer the range, the bigger the bump when you finally get out of it. And then the question is, are you going to bump through the top or are you going to bump through the bottom? I have been saying for an extremely long time that we're going to see a sell-off at some point. Last week I'd seen a couple, some interesting data. We got another great week of data out of China. So I'm not quite calling 100% a turning point. At this point, I think I've done it 3 or 4 times in the couple of years we've been doing this. But I think if we see a similar pattern in the data this week, say that we're not going to have a sell-off. Prices are definitely going to move higher from here. And again, it's stainless prices up another 4 or 5% week over week. Inventories are continuing to decline. Again, we've been so much talk about so much NPI coming from Indonesia, blah, blah, blah. But, we saw both ore prices and NPI prices tick up a little bit this week. And on the battery side, we've seen the sulfate discount to pure nickel, collapse pretty significantly, and payabilities for, MHP and MAT intermediates, which were at the 95% level a year ago, tanked probably below 70% in the earlier part of this year, are now all the way back up to 81%, and should continue to move higher from here. So, pretty convincing that we're seeing a pretty good rebound in China, and then the surge in EV that I was expecting maybe to come a little later is now on its way, and is pretty encouraging.
Okay, so some nice market signals there. You're not quite ready to call a turning point yet. Maybe next week we'll see what the data does for you. And I'm just again conscious of time is not quite on our side today. Partly because of me and my technical cockles, and partly because you're hard at it, walking the streets, as it were. Let's talk companies. Talon Metals, been a good couple of weeks for them.
Oh, in the cash for life U.S. government handouts for battery metals, the U.S. government is very serious about de-Chinifying their supply chain. And so they handed out a whole series of checks to different players, in the battery and strategic metal space. And Talon, congrats to them. They're picking up over 110 million US. What was interesting is that, basically free money, which everybody likes. And it was interesting as part of that, they announced that they're actually going to put their ore processing plant in a place in North Dakota and actually rail all of their ore into North Dakota and have the tailings there. So kudos to them to come up with a clever way to kind of get through the Minnesota permitting process, which, as Glencore and Antofagasta have found out, is a pretty painful process. So, good idea for them in terms of being able to do that. And, we'll see if they can pull it off, because that's, a pretty clever way to do it. And then the other big piece of news for them is, they bumped up. They basically, doubled their indicated contained nickel resource at an indicated level, which was great. And they've got, almost 1 million tons at over 4% nickel, which is a nice little starter area, which will help them, get things going. So good to see on that front.
Right. Well, yeah, I mean, fantastic grades. And like I say, free money. It's lovely. I want some. Yep. I'd love some. But instead, we're going to have to just work hard and invest hard. Quebec Nickel and Ducroix. Is that,
yeah, this is a project I'm not sure. I thought I may have talked about once, but again, they've got an interesting, again, in the same sort of bucket of deposits that we have, but they're hitting nickel, copper, and PGMs, sort of sub 1% for each of those. They're not getting the multi-100 meter widths that we're getting at our project, but they are getting sort of tens of meters of this stuff. So it'll be interesting to see. And again, this is a new discovery, and so I would definitely put this one on your watch list, because again, Quebec is again about as mining friendly as it gets, and it's further north of some of the population, but it is got some infrastructure in place, so it's in a pretty good location, to be able to push that forward.
Right, and there's Vale, I think, also little announcement from them.
Yeah, so they basically opened up the Coppercliff mine. This was a mine that we had designed in 2006, and we're looking to put into production if we had stayed as Inco. They got started on it in 2008, and then the market crash hit, and then they basically parked it. But they finally got it, spent the money deep in the shaft, and again, just to give people a sense of what the capital cost is to develop a nickel project, because, again, I know for us, people say, 1.8 billion, that's a lot of money to spend. But, the reality in the nickel business is you need to spend some serious money to get production. And so they're spending $950 million for 10,000 tons of nickel production, plus another 13,000 tons of copper, and there'll probably be 50 to 100,000 ounces of PGMs associated with that. So you're looking at $50,000 to $60,000 per ton of nickel production. And again, that's not they don't have 40 years of reserve that they're basing that off. That's kind of 10 to 20 year reserve life for that project. So again, just a real world example of what it takes to get nickel production, serious nickel into production.
Well, yeah. I mean, and you're going to join us for Low Graders King Week and talk about that. Yeah. I might get a couple of guests on who have got no agenda to push and no company to push, just kind of tell us about their experiences in the sector as well, and more broadly in terms of recoveries and stuff like that. But back on nickel, there's been quite a few. It's been a flurry, and I'm not sure we've got time for it in the next 4 minutes. It's going to go through everything. Yeah. But Estrella, SBC nickel, Flying Nickel, Gugnir as well. Lots going on at the moment, and I think I think the nickel side of things, people seem to be ramping up. It kind of comes back to all these conversations you're having over LME week. Give me it from the industry's perspective. Like you said at the outset, lots of little chats going on, but what are people looking to nail? Are they very much focused on the stainless side and waiting for EV to catch up, or are people getting super excited about the EV side of things? I mean, what's the nature of the conversations?
Yeah, it's primarily driven by the EV side. That's where the good thing this week is you get the various analysts. So Macquarie, BMO, CRU, Woodmac. They're all doing their various presentations, and again, I think people are now to the point where EV's real. It's going to grow at a pretty high rate, but again, I think analysts as always are a little conservative, and so some of the numbers they've got 30% growth in metal demand from EVs in 2023. Well, again, demand right now was 100%. I think 70 to 80% in a year where you had a war, a recession, and a bunch of other stuff hit the global economy, and so to think somehow that that a 30% growth rate from where we are today would be an utter collapse in the demand for for that product. So, people have to go through these stages. So it'll take them another year or two to be comfortable to actually put us 50 or 60 or 80% in their forecast. And again, that just creates the opportunity for investors, because if analysts aren't putting in the right forecasts, into their right numbers into their forecast, they're going to underestimate forecast, and the average investor is not going to get as excited as they should in terms of what the actual growth is really going to turn into. So, again, this LME week and this set of presentations is always helpful for me in terms of, helping to understand where the market expectations are today. So
it's kind of, the other thing that's been kind of interesting, which before we came on this morning, some of the guys like throwing data at me, not to do with nickel, but more broadly about the, we're talking about the metal market. We've used the phrase super cycle. People are looking. It's a very nervous time. It's risk off and all of those wonderful things. It kind of feels like people are just not doing anything. But our data is saying that actually our subscriber sign-up numbers are significantly increased. And when we sort of ask people what's going on, so it's because in 2020. It was really hard to get anything wrong. You could just like throw a dart at a bunch of names and you're probably going to make some money. But when times like this, where it's a little bit tougher, I think people are, they realize they're not quite the geniuses that they thought they were. And they're needing to, seek advice or guidance from people they trust. So that's really nice that, it's kind of, it's helped us. But more to the point about what's going on in the mindset of people. Again, the data is saying that actually, not only are there more people watching, but there's also, they are still reading, listening, and watching what's going on here, because there's a big expectation based on the data is that we're in a metals super cycle. I mean, nickel's in the thick of it, clearly with the EV stuff. But people can't see it yet. So they're waiting for that kind of go signal. And, are we at the bottom? Do we need to be at the bottom? All of those wonderful things.
Yeah.
Institutional investors too, likewise. I mean, are they going through that same thought process? I know industry isn't. They've got to get on with it. But what are you seeing out there?
Oh, 100%. I saw a bunch of the bigger fund managers in London at several events yesterday. And, it's the same thing. I think actually one guy said it, who runs one of the larger funds here in London. He said, over a 3 to 5 year time frame, I am 100% certain that this is going to be, one of the biggest, if not best, bull market for mining equities, because we haven't had that investment in new supply. So inventories are low, prices are still at already high level, and I'm going to go up from here if we come back into a cycle. He said the only concern is, and I said, yeah, you're worried about whether you might get fired in the next year, just because there's so many sort of one-off things that might happen in the next 12 months that really won't impact the next 3 to 5 years, but you might be really, really wrong for 3 to 6 months. And the good thing is, as an individual investor, you should be able to just push through that. As a fund manager, you might get turfed and then have to be sitting on the sidelines watching somebody else manage your fund, and get fund managed of the year for 3 years in a row after that. So, I thought that summed it up, pretty nicely in terms of that dichotomy of view. So, as I said, I think we will see some turning points. I think nickel, we're almost there. And then once we're on the other side of that, I think it's going to be a pretty fun 3 to 4 years here. So
you almost brought a tear to my eye for fund managers there. It's very sad indeed. Well, Mark, I know you've got to go, so you better shoot. Yep. I'll see you tonight, and we'll catch up on what happened the rest of today. Okay. Cheers.
All right. Safe travel, sir.